the panel discussions. Over to you, sir.
Thank you very much. Gentlemen, thank you very much for gracing the occasion. The panel, the topic of the panel that we have is on the one hand extremely critical, but on the other hand also a very hard one to crack, because the entire world is kind of looking at this issue for the first time. We are going to talk about green financing, and I think we have all the people on the panel who would have the most thoughtful perspectives on this. The way we'll run this is we'll get a lot of comments and insights from the panel, but I will also love for the audience to participate in some of the in the dialogue. So there are some questions where we would love to get your feedback and input as well. To kick us off, let me kind of open it up to the panel first, and from your vantage point, gentlemen, how are you seeing this entire green financing, climate financing shape up in India? How far are we down the road? Are you happy, satisfied? So let me open up with that question. And Mr. Tewari, if I could request you to start.
Oh, thank you, Yashraj. Good afternoon, everyone. So first of all, I was very worried that if lunch is opened up, I wouldn't have anybody here. So Yashraj promised that lunch is not going to be opened up till we finish the panel. So thank you for that. As far as green climate finance is concerned, again, this is a word which brings to mind other word which is evoked today with greenwashing. So we talk about it too much, but how much are we doing? That is the key question, because the time of talk is now virtually over. Whatever estimates there are about 1.5 degrees, there are some estimates it's already reached or close to be reached. So the time is actually running out, and therefore the time now is to actually start implementing a lot of things. Now, where are we in India on this? In India, actually, we at the regulatory side, as we know, there are still very early stage. SEBI has come out with the BRSR framework for reporting, and we have the RBI, which has just come out some months back on a questionnaire for banks, which we all have responded. So hopefully they will come out with some framework. So what is required is, one is to have a standardized framework of reporting. Right now we have many global frameworks. I hope one of those like GRI or TFCD or some such framework which is internationally accepted will be taken up. So that's one thing, one expectation which the banks have, so that we all report equivalently. In terms of funding, a lot of banks, including us, have issued green bonds. We have also got a lot of lines, credit lines from multilateral institutions for rooftop solar, for various renewable energy, largely in renewable energy space. We're also talking about funds for things like green buildings. So a lot of those funding lines are getting available, especially from Europe and multilateral institutions. In terms of where we are investing those and what are the opportunities available, I think those opportunities are at the moment largely in renewable energy space. Not so much in the other spaces. The EV space, for example, has just opened up. We are seeing very good traction, especially on the back of PLI scheme by the Government of India. So this again is a big opportunity. EV, not only the EV part, the charging infrastructure, but also the battery. Because battery is a key component not only for EV but for many other applications. As we know, renewable energy does need a storage on the time when the wind is not going to be blowing, or for that matter the sun is not out. This battery technology has evolved quite a bit. We are still some time away from a very stable scenario here, but then there are funding opportunities here. Of course, we are talking about smart grids and talking about buildings and meters and all of that. So by some estimate, Yashraj has given some estimate in his presentation, but by some estimates, the total size of this opportunity is as high as 20 lakh crores, 20 trillion rupees. So which means a very big opportunity for financial institutions and banks to attract, to make these investments, to get the funding lines and get this going. We are all aware of India's commitments under the COP and the nationally determined contributions. Those are very, very high. I mean, if you look at the current renewable energy capacity at 116 gigawatts, the commitment is 450. And it is 116 is not getting utilized fully. we are aware that the actual usage of power is still largely thermal. And therefore, the renewable energy, even if the capacity is 116, the actual utilization is much less. So when we talk about this 450 and how do we get there, that again is a very, very big opportunity. So there is a lot of opportunity, not only in the renewable energy space, but also in terms of the other elements of electric vehicles, the other elements of smart grids, green buildings, all of those opportunities available. Plus, there will be a lot of transition opportunities, which we haven't looked at. So, for example, a lot of people, when we talk to any investors, they ask about your emissions, etc. So, what we are looking at in our bank at the moment, apart from lines and getting renewable energy, and we have a fairly large portfolio of renewable energy, upwards of 30,000 crores at the moment. So, therefore, what we are also trying to see that can we start to measure the emission of our portfolio? We haven't done that yet. So, we are talking to players who do this, and we will be partnering with our customers, but we want to have a high-level framework which enables us to do a high-level measurement first. Once we do that, then we can work with groups of industries. For example, power. Now, nobody's case that India should not have the power it needs, and a large part of that is still thermal, will remain thermal for some time. So therefore, if it is going to be thermal, what do we do to reduce the emission of that thermal? FGD, for example, the flue gas is one such case. There could be cases like washeries to just wash the coal. It's a very low-cost thing, but it results in a lot of emission reductions. So we have opportunities available to reduce the emission of the existing power sources, not necessarily build up only renewable. So India, with being such a large country, does need multiple pathways, multiple solutions. One solution, I'm afraid, will not work. So with taking into all this into account, I think we have a lot of opportunities, and we are working towards that as a bank. And of course, we will work with all the industry as well.
Right. No, thanks a lot, Mr. Tewari. I think you obviously set us up with a somber tone about being cautious about greenwashing, but at the same time also recognizing that there are some really practical and rare opportunities. I just wanted Mr. Anand to get in the private sector perspective in this, and I know that you have been thinking very hard about it, potentially with investors as well. So how have you seen this play out?
I haven't been called Mr. Anand in a long time. I think the fact that we have to commit to transition financing, and I prefer that to climate financing, and I think it's also important for us to recognize that while climate finance, transition finance has become fashionable over the last few years, the S part, the sustainability part, is something that is embedded in every bank in India through priority sector lending, where we are mandated to lend to the weaker sections of society. So this is something that we've been doing for 50 years. While there is greater focus on the environment today, I think we must take credit for the sustainability aspect that banks have been able to deliver really over the last 50 years. I think coming to green financing or commitments to COP, I think the Prime Minister has made a commitment. Axis Bank itself is the first bank, at least in India, where we have a ESG committee at the board level. And so therefore they guide us in terms of what we need to do. We have adopted the IFC Washington principles, and so therefore what we do is, for every loan that we are giving out over a certain level, we are actually going out and doing ES due diligence. So we have a team that does that, goes to the factories, looks at effluents, etc., etc. And I'm quite delighted to mention the fact that for companies, let's say A and above, I don't think we have rejected any proposal because of environmental issues. So I think in general, adoption of ESG principles in corporate India is pretty strong. But having said that, I think the next level, remember the next big sort of growth avenue for all of us is the SME sector. And I think the cost of adopting, ESG principles within that space is going to be large, and there is a lot of education that we need to do. And I think that is a space that we will certainly need to work upon as we go forward. We've also, as Mr. Tewari mentioned, we have also done a a ESG 81 sustainable bond. Only two countries in Asia have issued those bonds. Very strong demand for that. I think the book was built about 3.8 times. Very tight pricing for that, and something that we're quite proud of. As Mr. Tewari mentioned, we are working with multilateral agencies as well to create guarantee structures as well. As we think about transition, I mean, we spoke about EVs, batteries, hydrogen, etc. But I think many of these are concepts at this point in time. They have not been scaled and may not necessarily be bankable at this point in time. But probably venture capital, private equity guys will come into that space. But is it possible for banks to work in some of these new spaces with the help of some of these multilateral agencies, which will give you first loss guarantees, to be able to build a small book, participate within that, and see how it goes as we go forward, are some of the things that we are really looking at. We've also committed to the external world that we will disburse 30,000 crores of green financing in the next 5 years. It's already 1 year, so over the next 4 years, and we are well on our way to be able to do that. We've also committed to within the EV two-wheeler space, we are committed to grow that to that the book itself will be 5% will be EV, and there is a rate of interest benefit that we are giving to customers within this space. We are also working towards reducing the overall exposure, at least in percentage terms, to the dirty sectors. So I think it is a journey. And I think banks in general are well down this journey. I don't think the issue, yes, I mean, very large numbers are being thrown around. I don't think the problem is the availability of finance. I think, we have to get that taxonomy in place, the point that Mr. Tewari was making, so that we are all on the same page, when we define, green or climate financing. And I think, getting that in place becomes very, very critical. And once we get that done, I think, bankability of many of these projects, I'll just, get to that in just a moment. But I think availability of financing is not a problem. But I think ultimately, as banks, our primary concern will be the viability of each of these projects. Under no circumstances will we lend to projects because it meets green financing considerations. It has to meet the bankability criteria that any bank would have. I think that is very, very critical.
That's fantastic. It's extremely encouraging, Rajiv. The entire spectrum of ideas and initiatives around, just from funding 81 bonds all the way to thinking about lending and education for the MSME sector. It's quite phenomenal. The fact that nothing has been rejected, at least AA and above, because of ESG in terms of credit, it's quite remarkable. Mr. Chand, I know that you have been, when we spoke before the event, you mentioned a lot of thinking going within the Bank of Baroda and as one of the larger public sector banks. How are you seeing the market play out? What do you think is the real movement which is happening in the market which will make a difference?
Yeah, thank you. See, currently, if you look at the scenario on the entire ESG financing, any incrementally, if you look at as a bank, we are more towards the renewable side. So if you talked about a 30,000 crore book, like last a year and so, possibly Bank of Baroda would have created a $1 billion USD book. 1 billion USD, something around 8,000 crore of in a year time we have created. So while saying so, that the focus is with regard to the renewable energy, and there is a great in terms of creating capacity to look for the 500 gigawatt kind of a capacity within India in 2030. But at the same time, as a bank, we are also quite long on the carbon intensive side also. And the dependency on the carbon intensive is going to be there, and currently the geopolitical scenario across world, we can't have anything beyond that, because the dependency would continue for possibly decades. In that same scenario, as a bank, what normally we have been doing, and the corporate also increasingly coming to us, to have some energy efficiency measures within that, which can typically reduce the carbon footprint. And as a bank, as we do have a comprehensive ESG framework and lending practice is one of the part of the ESG, increasingly we are all engaged with our customers in terms of how do I improve both in terms of lowering the carbon footprint, at the same time creating capacity for renewable, which we have been doing very, very aggressively, and the market is also tuned to that in terms of both solar and wind in that way. So this is one aspect of what Bank of Baroda we do on the lending side, but I believe that the ESG financing or green financing is a bigger, what you can say, the bigger ecosystem in terms of how do you drive the entire country to get into a lower carbon kind of a scenario. So one aspect that I do have, which we normally talk about, that how do, as an organization, I create some kind of a better ESG roadmap. Just to articulate for an example, as like from my foundation day from July, any new housing loan or car loan I give, I plant a tree. And we do that through an agency across India, and almost like 74,000 of plants, trees we have planted as on today. And in 3 years' time, we have a plan to make it 3 lakhs to 5 lakhs kind of a planting tree. So my sense is that to make the entire ESG more intensive across all vertical, like in India, the better part is that anything with a financial incentive does work well. Like we have seen in the financial innovation also, incentive does work well. So as a country, now the time has come wherein we need to go beyond the lending side to see that whether we can pass on this carbon credit. An example which I have given just now, make it more of a standardized, bundle it and make that as a financial product. Because we do have a very excellent financial market we have. And that can typically make the entire country as a whole more towards the ESG framework. And we as a banker also, ESG talks about the environment and society also. Then we have been, priority sector has been one key piece of the entire thing. As a banker, we have been there for priority sector since long, and we are keen to have the society getting impacted in terms of better living standard, better capacity in that way. So as a bank, we are very keen, and as a lender, increasingly, as I said, and we are, if I look at on a curve in terms of our migration towards the COP commitment, and then we are riding the curve, although we may not be at the high end of the curve, but we are riding the curve, and possibly a couple of years from now, we'll be in a better position to have that mapping in terms of the mandate that we think of a zero carbon by 2070.
Thank you. Manian Bala, I'm going to come to you in just a bit, but given that there were a lot of claps in the audience, it looks like there's some energy, and I want to just tap into that a little bit. If you could bring up the slide, there's something I wanted to check with the audience. So, a few quick facts about some of the early moves that have happened in India. Many of you might be familiar, but putting it all together in one place really kind of opened my eyes. Everyone has spoken about one North Star national ambition, which is net zero by 2070 and so on, which is obviously great. But even the regulator has actually started moving making some very seminal moves. By 2015, basic renewable energy financing was included in priority sector. Indian regulator has become a member of NGFS, which is the international body where 114 odd central banks have come together to think about climate and green finance. Obviously, there are a lot of discussion papers and interactions happening with the industry, and a lot more which is happening even beyond that. So I think overall, pretty interesting moves happening. Just shows how serious this issue is for all stakeholders. And this was what Mr. Tewari was referring to earlier, which is really it is a $1 trillion journey. Whether we look at it as an obligation, whether we look at it as an opportunity, that's something we need to think about. And Rajiv is spot on. This has to be a commercially viable one to really get funded with the amount of debt this is going to require. So the commercial viability and the economic rationale behind these are critical. But if this is done right, this is a $1 trillion journey that we need to do, and way beyond just renewable. Buildings, waste, mobility, biofuels, hydrogen. There's a lot that needs to happen within this. Will this demand get met? We need to see. And obviously there are hurdles. We'll talk about that. The frameworks for assessment, audit, etc. are critical. Now, here's a question for the audience. Now, having heard what we have heard and having seen what we have seen, all of you are in the market in senior positions. How many of you are optimistic that in the next 5 years, the Indian financial services sector will be able to gear up to address this $1 trillion demand, which is going to come up. Show of hands, maybe how many of you are optimistic? Yes. Okay. I will ask for no because some might be indifferent. So how many for no? Okay, I think this is really helpful. There is obviously a large portion which is sitting on the fence, right? Which is they don't want to commit. But it's great that there are more saying yes than no. Still, the dominant silent majority is kind of sitting on the fence. So that brings me to Manian, you, and then Bala, I'll come to you as well. How do you see institutions gearing up, and are we being too optimistic and dreamy-eyed about it?
Yeah, Yashraj, I'll make a nuanced difference from the earlier speakers. Personally, I am of the view that we need to hasten the walk on this compared to the talk. I think far more needs to be done. I mean, everybody intellectually agrees to this, but I think we've been slow off the mark. And my own sense is that, these things require a framework of benefits and incentives which have to be put in place. Without that, it's difficult to make it happen. For example, I mean, you mentioned there that renewable energy was brought into priority sector. I think there is much more regulators can do. Much more of this can be brought in as priority sector, for example, as a regulator or as a government. Let's say things like during pandemic, the way we supported the SME sector through a guarantee scheme, right? Rajiv talked about the credit issues that can come up in this financing, right? There will be uncertainties in this. There is learnings to be done. Banks may be uncertain about whether to lend. If there is a framework of guarantees put in place equivalent to ECLGS kind of thing, it could work. It could, there was a time when RBI used to incentivize export finance by doing an interest subsidy. So could we do something like that? So I think we have to think through. There are numerable things that can be done. Can there be better depreciation rates for lead buildings? Multiple things. You can think of so many things. But I don't think we have made concrete progress in terms of if this is so important and all of us believe that it is important, I think we need to make significant regulatory as well as government actions to promote this for the banks. Banks will of course do it, but like Rajiv said, like the other gentleman, Mr. Tewari said, Mr. Chand said, he talked about the carbon credit thing as an incentive, right, indirectly. So I think banks are willing to do, for example, our own bank, we are among the best rated ESG banks. If you pick up the ESG scores, we are one of the best rated ESG banks in the country. We put in place various measures to evaluate ESG when we lend, board committees. All those, of course, we have to do. But my own sense is that these are not enough to get the momentum that we need to get. And I think this has to be done yesterday. That's what my...
No, thank you very much. The fact that if the 1 trillion demand needs to be met, we need a lot more enabling framework. Some of the risks are going to materialize for the very first time. So it's very hard to really sit here and on an Excel sheet feel comfortable that this is a risk worth writing. And Rajiv?
One of the things that we need to also understand, look at renewables, for example, right? I mean, we've been at it for banks have been at it for about 10 years. Right, it's really over the last 3-4 years where banks have got more comfortable, and you bring a renewable project, it goes through the credit committee quite easily. The quality of the sponsors has improved quite significantly, and therefore, all of us have fairly large renewable books. I think whether we like it or not, we will have to go through those journeys on some of these other EV batteries, for example. I mean, the last word on which is the technology that is going to work is not yet there, and therefore, as a banker, I am not a venture capitalist, and so therefore, unless the technology is clear, it is viable, we can see mass scale, we see good quality sponsors, we would obviously then look to lend. And so therefore it is not just banks, pools of financing that is important as we think about transition financing, but it is also risk capital that needs to come in.
No, phenomenal. It's not just the bank's pool of capital, but also the risk capital. So we, I mean, naturally in a steady state, at least 1/3 of it right now needs to come from equity, even by our estimates. Bala, you actually have a cross-border view of this phenomena, right? And we are going really deep into the Indian realities, but would love to hear how does this sync up with what you're seeing in India, but also maybe in other parts of the world as a foreign banker?
Sure. I think I'm actually extremely bullish about the entire ESG financing space. So at Bank of America, our ESG journey kind of started off 2019. Brian Moynihan, our CEO, made a $300 billion commitment towards green financing initiatives. We upped that last year to $1 trillion for environmentally focused initiatives and another $500 billion for the broader social space to meet the UN SDGs. And I think linked to that, I think every person down the organization has been trying to think, how do I run my business in a manner that tries and meets these goals? And so when I think about that, what have we done? From an investment banking perspective, for example, we've been very, very active in the entire green space. Worked on a number of capital raises as well as exits for people who invested in renewable companies. And I think the renewable space today, the fact that you've had multiple people make successful exits, the fact that you have people like a Shell who invested in a transaction that we just led this year, $1.6 billion enterprise value transaction for Spring Energy, or a GSPC from Thailand, which invested taking a 45% stake in Avada. It's another transaction which we did last year, investing $450 million. I think what that brings out is that this is something, it's not just something you're doing to do good, but it's something which makes money while doing good. And I think that approach has to be extremely important. And for that, we do need the right regulatory framework, which lets people make money. So, for example, the commitments, having something like SECI as an off-taker for green power has helped reduce the risk perception about, the DISCOMs and everything else quite considerably when people are investing in renewable power. Similarly, I think the entire framework where different states have given incentives for EVs means that you have EV penetration increasing rapidly, and so you have a deal such as TPG going and investing $1 billion into Tata Motors EV platform. And I think it's the same thing that, so you'll have to strike a balance. There are things, the initial investments will need to come from what I'd call risk capital, a lot more equity. But I think ultimately speaking, as long as the regulatory framework is right, this transition is going to continue. And as you rightly said, there's a lot more to be done. I thought our estimates were about $250 billion more towards renewable energy, probably $500-600 million to come in the EV, battery, storage, green hydrogen kind of space over the next 7 or 8 years. And so it'll have to be this mix. And I think some of the things that people talked about, such as, for example, expanding the priority sector ambit for green financing beyond just the very small projects towards large projects. And we should not see large things as not being things that need to be supported. In fact, it's very often the large projects that lead to dramatic transformation. So at least that's where I would look at it.
Thanks, Bala. If you could pull up the slides, we'll shift gears into the next section of the discussion. We'll go around the horn a couple of times just for the audience, and towards as we get to the fag end of the session, I would love to keep 5-10 minutes for an audience Q&A as well to the panel. So if you want to start jotting down your questions, this is probably a good time. So I will come to this question because Manian, you raised this, that you talked about depreciation. I think a lot of people on the panel spoke about PSL and other framework, rating frameworks, audit frameworks, etc., etc. As providers of debt capital, and maybe your perspective also from an equity capital perspective, what kind of innovations really are required to even start addressing this opportunity? And can we? I will go on this one. I'll go around the horn, the entire panel, and get your inputs and feedback on this.
So earlier panel members talked about pools of capital available, especially in Europe, right? Where there is a pool of capital available for investment in these initiatives. That's not. India doesn't have those pools, right? In India, you can't find those pools easily. Of course, one thing is to go out to those pools in Europe and get them to invest in India. We have made some tentative efforts in that. There's still, the project risks here. These are not easy.
What are you hearing in those outreaches? So
either the sizes. So the small sizes are more difficult to get from these pools, right? They don't want to do 20 evaluations to get to investing in India. So they want a large project, but large project comes with project risks which are not acceptable to many of them. So one of the things innovation we have to do is how to create these pools locally. We are also one of the largest wealth managers in India, and I find at least initial interest. I won't say it's a huge flow, but there is interest in high net worth individuals and family offices to create a pool out of their overall pool towards ESG. And we are seeing initial interest, but we have to find a way to channelize them into vehicles which will get benefits in making those investments and can provide. See, one way to think about it is it their CSR? But that's not the way to do it, right? It is not charity that we want here.
Right.
It must be commercially viable. People have been talking about that. So it must be commercially viable. So can we provide them the right returns, even if they take some risks in keeping away some capital, part of their capital, for investment into this. So I think we have to think of incentives for creation of those pools, and there are various ways of doing that, but we can discuss that in detail. But I think this is one thing I personally feel is a big innovation that can be done. You can create vehicles specifically designed to invest in green and give them some benefits.
I think this is a phenomenal point. The India offshore available AUM base is north of $600 billion, but when we looked at propensity to invest in funds or structures that are tagged ETF, it's high, but there is no appetite to take any economic haircut for doing that, right? So your point is,
right.
Yes, it's something that they would want to do, investors, but not something on which they'll take a haircut.
We aren't seeing investors saying that, okay, it's okay, you do it in ESG, I am okay to take 3% haircut.
Yeah.
If my return is 11, I'll do it at 8 here. I don't think that's happening. So we have to create that structure.
Actually, maybe that's a question I want to throw back to the audience. So again, show of hands. It's a simple question. We are discussing that if we were to launch mutual funds, ETFs, which were green, which were climate, how many of you would be able to take slightly lower returns, let's say 2% lower returns, but still put money in it because it is green and climate and ESG friendly? Those in favor, show of hands. Okay, there are a few hands up, so they are early adopters.
I must say 2% lower is a lot.
It's a lot.
20 basis points lower, maybe you'll have more hands.
Yeah. Actually, maybe, okay, 20 basis points lower. Show of hands. Okay, we have price discovery. So, Rajiv, over to you, boss. I mean, what kind of innovation do we need to do, if any? And let's say the top 1 to big changes that can make this work.
I actually want to see it from the other side. Bring us bankable projects, right? We'll worry about what is the structure that should support that. Same point that I made on renewables. Banks are now very comfortable with renewable structures. The NTPC SECI structure as an obligor on the other side has got created. Most banks don't touch state government PPAs. All that has been a process of evolution, right? So therefore, rather than create an innovation looking for a problem, I want to look at it from the other side.
Yeah.
Let's look at a project. Let's look at the bankability of that project. What is the risk that the banks are running?
Yeah.
And then accordingly, try and create solutions.
Yeah. No, perfect.
Just coming in there, since he talked about it, it's a related innovation one can do, is what I already referred to. You can create guarantee fund like it was done in the case of ECLGS during COVID. You can create a guarantee fund in a specific area which is important for us, whether it is renewable or whatever other area. See, renewable, there is still some progress, I would say.
Sure.
But there are lots of other climate areas which need progress.
Sure.
So if on a targeted basis, there could be a guarantee fund created, sponsored by the government, and therefore increase the bankability of projects or increase the returns on projects.
Right.
The fund could do both.
Right.
That's another possible innovation that is possible.
Sure. I think these ideas definitely get baked into a set of recommendations that go back to the regulatory ministry. So this is very helpful. Mr. Tewari, I could request you to talk about any of these two or both of things. One is any more innovation, and specifically maybe to address the pools of demand that sit beyond renewables, because as been addressed already by Rajiv and Manian, this has been solved for over the last several years. The other one could be that are there hurdles you think we need to?
Yeah, so let me start with the pools of capital problem. What we are seeing is, and we have got more than $2.2 billion from international pools of capital, the multilaterals largely. And what we are seeing, and this is based on our conversation, when we started with the World Bank line, it was rooftop solar. They wouldn't agree to any other format. So we found it very difficult to actually utilize that money, and it took some doing. So now increasingly what we are finding, the multilaterals and other pools are ready to actually be more flexible. So when we talk about solar, they are willing to say, okay, commercial solar, rooftop solar, ground solar, and maybe going into other areas as well, as long as it is renewable. So that flexibility we're already seeing, that's one. Second is, as far as innovation goes, I mean, everybody has made this point, the projects have to be bankable on their own basis. Until they are there, then some kind of a support, whether in the form of a guarantee or within the form of a backstop or a first loss, some such support will be required, especially for newer areas. And as they pick up over time, yes, they will become commercially viable. Like solar today doesn't need any support, etc. It is viable on its own. And of course, now we are seeing the tariffs fall to such a level that it is either competing or better than thermal in many cases. So that's the other part. That what are the credit support structures till we evolve to a viability status on its own. However, I would also point out to a lot of opportunities which exist on a national level. So for example, if you recall about 10 years or maybe 20 years back, there was this national campaign on replacing all the incandescent bulbs with CFLs. And it was very viable on its own, though the initial cost was high. And over time we found that a mix of some subsidy provided on the bulbs by the government, lot of educational campaign, lot of promotion, and we have had a 90% conversion from a normal light bulb to a CFL. The other big opportunity which is available is the fan, of the standardized fan, which the Bureau of Standards has come out. The amount of reduction of power requirement is as high as 40-50%. Similarly in ACs, big opportunities in all these consumables which we have, which every household uses. So why can't some kind of a inter-agency, inter-government plus banks, for everybody together, we can create packages, we fund ACs as a small consumer loan. Why can't we give some national campaign on these, and we'll find the result of this would be amazing. In a country like India, if all fans get replaced by the standardized one, and every household has a fan, I mean the kind of emission and the power requirement which will be there will be massive. So these opportunities exist. We just have to have those conversations, not only talk about very big events, very big projects. These are small opportunities, but the impact could be very large.
So this is fantastic. I mean, this is so insightful. At the other end of the spectrum, these are small granular opportunities, completely domestically controlled. Maybe if we have some time towards the end, I'd love to hear a bit more about how suppliers of capital are becoming a bit more flexible. You said something extremely interesting on a very large pool, so would love to learn more. But Mr. Chand, if I could bring you in on both the opportunity and the hurdle, and I'll towards the end, once Bala has also commented, we'll open it up for audience Q&A as well.
Yeah, I do agree. The innovation that we require more on the product side than anything else. as far as capital is concerned, I don't think there is a constraint because existing institutions are capable of funding all these requirements. And the structure do evolve along with time. Suppose there is not a bankable and then we want some kind of a guarantee, then it evolves. So to my sense, capital is not the constraint at all for creating the scenario that we are talking about in terms of green financing. There would be bond market, definitely green bonds and all, but then that would be there.
Sir, example of this product innovation you spoke about?
So one that take that I have a slightly different take for a larger theme on this ESG. Like the carbon footprint that we talk about, carbon credit for manufacturing, can we extend that to entity who typically don't produce it, but then they are making efforts to reduce it? And then you bundle that into a financial product, then it would work, because then the cost of ESG would be taken care by this. And then we don't have to have talking about incentivizing thing to roll out this a bigger mandate of lower carbon emission. So I think actually on the product side, even Mr. Manian talked about product side, I do keenly believe that we need to do much more on the product side so as to make things more what you can say, more attractive for people to get in and get in a big way. So that at least on the ESG curve, we need to be ahead of the curve so as to, because we are the fourth largest greenhouse emission. So, as a whole ecosystem, we need to, we have done exceedingly well, but at the same time, the opportunity are huge for us to slightly go ahead of the curve and create some kind of a model for the world also.
No, this is fantastic. I do remember in our previous conversation, you mentioned that we have to realize that it's not going to be a wave of wand where all the brown is replaced with green. So we have to find a way to make even brown more amenable and greener. So this carbon credit and all of these improvements, I think very, very practical, very realistic ideas. Thanks a lot. Bala, your comments before we open it up to the audience.
Sure. So I think as everybody has said, the renewable space probably is self-sustaining in India today. But obviously, as the amount of renewable energy goes up, now you have to find ways to store that energy, use that energy, and that's why I think you have to drive innovation. To my mind, and it's something we always ask for in terms of tax incentives, but tax incentives for green pools make a lot of sense. Both for international investors looking to come into India. For many, many years we had the Mauritius-Singapore tax treaties, which effectively let international equity funding come in with very, very low rates of taxation in India. And now that's been tightened up for most sectors, but if I were to think of one space where it would be justified to create such incentives, it would be the ESG space. And similarly, just like we have, for example, InvITs as an attractive structure for investing in infrastructure more broadly, could you create some kind of a regulated venture investing structure which helps bring in that pool of private wealth, which Manian talked of, into the market? I think those are a couple of ideas that we could throw and could help serve the next phase of the energy transition in India.
My God, I think the range of ideas and suggestions that I have, there's probably 10 unicorns sitting on these 2 sheets of paper. So I'm going to try and collate this and put it up on our blog and on this as well. But in the last few minutes, I would love to get in some audience questions. Is there a mic that we can? Is there someone? I'll come to you. I'll come to you. मैं आ जाता हूँ.
In this entire discussion in the panel of 5 panelists, I think 3 of them are weighing towards the risk capital, private equity coming in, HNI, family offices. So this is not can you imagine that those people coming at the return less than 18 to 24% IRR which they are looking at, and can this sector survive, which has no visibility, no clear commercial viability? So we have to think out of box. And these commercial banks, they are not going to make that kind of mistake which they have made 20 years or 15 years back. That just on a government call of infra, of airport, roads and business, they have burnt their fingers, power sector. So we'll have to think out of the box and find out some solution to meet this 1 trillion demand. of ESG. I think some bold answers have to come. Yes, we are ready. We are ready to take that risk as a commercial bank, because the major factor today is of commercial bank funding them. Not the private equity, not the investors coming in from outside, or not those family offices. Name a single family office who has put any money in last 1 year or 2 years in this sector. I think it is difficult, sir. So we'll have to think little differently on this. Your view, sir.
Manian, please.
Well, in fact, if you heard me say, that is precisely what I said, that family offices are not willing to do it. So I didn't say that they are willing to do it. The question to answer is, how do you create pools that will go into this? There is definitely some risk capital that has to go in. The commercial banks cannot fund it if enough risk capital doesn't go into this. Otherwise, it will be a mistake of a different kind, by different name, called by a different name, but it will still be a mistake. So if the expectation, banks are happy to do their bit in terms of the debt capital, but the debt capital cannot be with equity risks. The debt capital give debt returns and they must have debt risks in them.
Very right.
So therefore, it is important, if we want to drive this initiative, both the kinds of capitals have to come in. The risk capital in terms of wherever, whatever name you give it, whether you call it private equity or you call it government guarantee or whatever, which takes the risk off, creates the debt as a debt risk, is very important. Therefore, the walk has to be both ways. It cannot be, the whole problem cannot be dumped on commercial banks and say, now you finance it. They have to have an enabling framework under which they can finance it. They are happy to do it, but they need that enabling framework.
I'll just add a couple of lines here, if I may.
Please.
We have one example in our group. We have a very small group company called SBI Ventures. It's 100% owned by us through capital markets. This company has gotten a lot of, its company is better known by the Swami fund which it runs for the last mile real estate funding. But more than that, it has had two SME focused funds called NEEF funds, where it has attracted multinational capital, JECA and UK funds, etc. So it is providing to companies focused on the ESG space in the SME sector, which is again a very niche sector. And we have seen very, very good results. The overall investment amount is just about 1,500 across two funds. Now, I see the role of the banks as to when that equity capital has come in and this company has scaled up to a certain level, and we have seen Shell, etc., come in at a later stage. Why can't the banks lend at that stage? So I think this has got to be a combination of this initial risk capital coming in from such kind of funds, and then subsequently the banks can come in while the company has scaled up. So that's one model we can pursue.
Got it. No, superb. Sorry, in the interest of time, maybe one final question. If you could also introduce yourself.
I'm Sunil
There's
Mehta
one more?
here.
Yes, we'll take two questions. Thank you.
Yeah, I'm Sunil Mehta here, not in the first row, the second row. Okay, now you just spoke about out of the box. I'll speak within the box. Like all of you have funded a lot of projects which has a very high level of ESG compliance, no doubt about it. Can we some way identify existing finance project itself, green and non-green out of that? So that there's awareness amongst the people who are putting up the project. Today, frankly, those who are putting up the project, most of them really cannot classify what is green out of it or non-green out of it. Probably even it's evolving day by day. So if every bank can identify some project which they have funded on a test basis, probably that would be a big boost, and everybody would be aware. Like business people, the moment they see that there's a benefit, they will identify green, non-green, and come to the banker.
Sir, you said it right. As I said earlier also, we are very long on the renewable side, but existing carbon producing, particularly in the power sector, increasingly the conversation is with regard to energy efficiency, and we had a typical case wherein a thermal wants to go for a solar. I mean, those kind of structures are evolving, so it would take time, but then the conversation is on the right side in terms of how do you look into the existing, how do you reduce the carbon footprint or emission of the existing carbon intensive kind of industry, and that's happening. but scale and extent can go up subsequent, like in couple of years from now. But then things are moving in the right direction from the point that you have said.
Thank you.
So I have a related question actually.
Can we go on a bit longer? Sorry. This is one panel after many years that I think we can go on and on, but I also want to...
Hello. What I understand from newspaper reports, just follow on question, that United Phosphorus has refinanced their 4,000 crore portfolio by dividing into green and non-green, and they were able to get green finance on that. It's a big deal, that's what I'm saying.
Thank you.
Yeah, hello. Yeah, I'm an ex-banker. If I understand correctly, ESG is a very noble initiative, right? At the moment. Bankers are in the business of not taking business risk of a project. All business risks have to be apportioned to the guys who are best positioned to take those risks. So you are stuck in a quagmire of sorts. And the potential solutions cannot be sort of, looked at somewhere in sight, right? What could be potentially a solution is something which the government of India had started from the independent power policy, way back in 96, 97, is that, they had some showcase projects like 8 central counter-guaranteed projects, right? Of course, only one turned up, one came into being. So, as I understand it correctly, the first solution could be that, through budgetary allocation by the government to serve this noble initiative, that's probably the only solution to begin with. And then, as you have more projects, seeing the light of the day, then, risk capital as well as lenders can come in. Your views, please.
Yeah, I'll take that. To my mind, actually, let's break this up into 2 bits, right? So for renewables, what did the government do? They came up with SECI and NTPC as effectively high quality off-takers to reduce risk perception, and therefore they attracted risk capital. Right? And I think that's worked very well, and you've got to a stage where banks are comfortable funding that. So as we move ahead towards areas such as green hydrogen, storage, batteries, EVs, I think these are spaces where you need a lot of innovation. And it's not that you're copying a playbook which exists elsewhere in the world. Even elsewhere in the world, people are trying to create the playbook. And therefore, you need risk capital. And that's where my point was that, effectively speaking, therefore, you have to try and reduce or at least increase the upside that someone can make for investing that risk capital. And so it's probably an ideal space for the right kind of tax incentives to come in. And for bankers to start funding this, obviously they will be able to start funding it in terms of debt financing, provided there's a sufficient equity cushion and provided that the technology is known to work. Today, we don't know whether, for example, if you look at two-wheelers, we don't know whether it's going to be a replaceable battery, whether it's going to be a fixed battery, whether it's going to be whatever. There are 20 different technologies that people are talking about. Very, very difficult for a commercial bank to lend against that. It has to be incentives for risk capital, which 3 years from now, some of this will play out, and then the banks can step in.
Super.
So I
want to get to the panelists will be here. If it's okay, you can always hopefully catch them offline. But towards the end, just getting to final word. Rajiv, if I may request you to start off by commenting on any final words as we bring this panel to a close.
Just a last point. I think all of us spoke a lot about financing of either transition, climate finance, etc. Unlike manufacturing entities who have a responsibility, who create, sort of emissions, etc. I think banks in general, their core business doesn't, generate much emissions, etc. But I think it is very important as financial institutions to push our borrowers towards commitments towards a green climate. And I think, if you put the collective pools of capital, whether it is, through mutual funds, banks, private equity, etc., I think each one of us has a responsibility to push our borrowers to be able to commit to this green environment as well. And I think that is perhaps a bit underappreciated at this point in time.
I think that's a great point. The fact that all providers of capital, the entire ESG capital stack kind of needs to encourage the users of the capital towards green. Manian, if I could call on you, and then Mr. Tewari, Mr. Chand as well.
No, I would sum it up like this. There are three parts to this: the customers, banks, and regulators and governments. हम सब साथ साथ हैं, सबको एक एक कदम चलना है. The expectation cannot be कि इन तीनों में से एक ही आगे बढ़े. All three have to move step by step.
It's a sack race, Mr. Tewari.
Yeah, so if I take the three-wheeler analogy, Hindi wheels में एक पहिए पे भी चला है. So, so yeah, taking this forward, there definitely on the regulatory side, as I mentioned earlier, we do need clarity. Not only in the measurement framework, but also reporting framework. All of that definitely needs to be in place very, very quickly. Add to that the carbon trading framework, etc. That also needs to come in very quickly. And then, as all of us have talked about, the capital being available, it has to be a judicious mix of private capital, the banks funding, supported by structures of either guarantees or additional risk mitigation structures. I'm sure this would go alongside, and it's not that the sector is standstill. I mean, the kind of sense I get from a lot of questions is that some big bang thing has to happen, government has to come in, or somebody has to come in. Everybody is doing the bit. So it's not standstill, but we do need to move very, very quickly forward. As we say, time is running out, we should have done this much earlier, but it's moving. So a lot of hope for that.
Thank you, Mr. Chan.
Yeah, I think the best part of the entire thing today is the conversation around this ESG and the green financing, and that's the most beautiful part wherein we can again, coming years we can leapfrog. But again, I reiterate my earlier in terms of can we bundle all this credit and make it a financial product, can be a great thing to happen for India.
Thank you. Bala?
Yeah, so I'd say, as everybody has kind of said, you need that mix of horses for courses, right? So there are spaces where I think banks can come in. Over there, you need to have perhaps some mechanisms to ensure that the credit risk is appropriately mitigated, including first loss guarantees, the right off-taker, things like that, the right regulatory framework. There are spaces where equity needs to come in, and for that you need to create an appropriate incentive mechanism. And as everybody said, measurement is something that is extremely important. You get what you measure, and I think corporate India probably has lots of easy wins which make economic sense, and as long as it's being measured, people can go out and do that.
Thank you. This has been one of the most fantastic pre-lunch panels that I have done in a long, long time. There were a lot more hands, but hopefully we will be around for you to answer some of them offline. Thanks a lot. Thank you so much. Thank you.